First Trust SMID Cap Raising Dividend Achievers ETF, ticker SDVY, provides investors exposure to U.S. small and mid-cap value stocks using a smart beta, factor-orientated methodology. SDVY seeks to replicate, to the extent possible, the performance of an index of U.S. small and mid-cap companies, initially the NASDAQ U.S. Small Mid-Cap Rising Dividend Achievers Index. That index is comprised of 100 quality small and medium-cap companies with a history of raising their dividends. These companies also exhibit the characteristics to continue to do so in the future. The index construction process, using factors such as dividend increases, growing earnings per share, higher cash-to-debt ratio, and payout ratio, creates what we believe is a blend of historical and forward-looking screens intended to measure a company's ability to grow its dividend along with its share price. We also have a hedged version, SDVY.F, that seeks to hedge substantially all of the US dollar currency exposure back to the Canadian dollar. We know the rate cuts in the US have begun, and many people believe we could see 200 basis points of cuts by July 2025. And while the effects of these gradual cuts may not be immediate, in time, investors could be favorable to companies that benefit most from lower rates. If we had to pick a group that would eventually benefit the most from multiple rate cuts, we would suggest dividend-paying companies. In a market currently enthralled by expensive momentum stocks, quality, inexpensive dividend-paying stocks are hiding in plain sight. Further, by some measures, small caps are the cheapest they've been in 20 years, though not all companies are created equally. And some estimates are that 40% of small caps are unprofitable. Among the quality factors in the SDVY portfolio, we like that there are zero unprofitable companies in the portfolio. We think SDVY can be a core component of a portfolio alongside large caps. Currently, portfolios may be overweight, and rightfully so, to large cap and growth-oriented stocks. We think a shift to quality, inexpensive dividend stocks as a means of style diversification in the small mid-cap space could benefit a long-term investor.